Okay, good evening, everyone, or good afternoon, or good morning, wherever you are. Nice to see all of you here. Rafi is going to join us today. Uh, he'll probably be joining us in about 5 to 10 minutes. Billy is here. He's asleep. He's doing well now. I saw there's a new follower here. He's actually from Brazil. And he said that, Luciano Cardozo, he says he's a new follower and he's enjoying the channel. So I'm translating there for the English speakers. Spock is here, Echo Echo, Scott 49140, Scoobyism 3. Who else? So we got Des Smith. Hi, Des. Brady Girding, as usual, he's always here. Pablo Pina, Team Economics, Cobalt Silver. Rumors of Fed pivot. Yeah, there is talk that they're going to have some kind of meeting tomorrow, the board of the Federal Reserve. I mean, they do meet regularly on Monday, but we'll have to see. Joker Alpha, he's in the afternoon in the Pacific Northwest. Patrick Bateman, sorry. Ben is here. Curiously inquisitive. Jay, Keith from Arizona, Soul Brother is here. Jay Atwell, hi Jay. Trying to get everyone. Sorry if I missed any of you. Gur Olgi, he's an old follower from Norway. Red for Danger, Dead Snake, Arndt Kitz from Deutschland. Oh yeah, interesting. I said Deutschland and you're from Germany. I will talk about it now. Why not? While we wait for Rafi. There's a talk that VAT on silver is going up to 19% in Germany, but I can tell you it's not true. So what's the situation? Well, I spoke last night to a really good friend of mine. He used to be a client when I worked in the city. He's in Germany. He used to work in banking. He worked for the biggest precious metals dealer in Germany for many years. And he said that basically the VAT on silver is 19%. And the way the dealers there get away with it is that they buy imported silver in a tax-free vault. So basically when they buy Philharmonics from a Canadian company, but the Philharmonics never leave Germany, they're in a vault. So they pay VAT on the profit that they make. So that's what I heard. Dmitry Shmerkovich, thank you for your super chat. Do you see another metals or miners sell-off soon? I mean, the metals have held up quite well, at least the ones that I have, and the commodity stocks. So they seem to be decoupling, but anything is possible. But I look at them, the miners at least as owning a business that I think will do well in the future. As for gold and silver, the bullion, I have a feeling things are getting really crazy in the overall markets, in the whole system, that even if they were to go down, the paper price, I think it's getting harder and harder to get the physical. So I'm not really concerned about fiat price moves. Carlos Garcia, hi, Carlos Garcia. Jose Miguel Santoyo. Yeah, the Fed emergency. I'm not too concerned about whether they're going to have a meeting or not. In the end of the day, they will have to change policy very soon, I think. So it doesn't really matter if they do it tomorrow or in 2 weeks or 3 weeks. I think things are getting really, really bad in terms of the stability of the system, especially the government bond market. Scoobyism, thank you for your super chat. Henrik Schoblom from Sweden. Good evening, Henrik. BP, I'm sure you've heard what's going on with Credit Suisse. Oh yeah, Debit Suisse, you mean? Well, yeah, Credit Suisse has been, yeah, their share price has been, I think it's halved this year. We've seen its CEO come out or chairman saying that everything was okay, and now he said that the latest comment, I think yesterday, was that uh, they were in a tough moment. Their credit default swaps um, went up quite a lot. That's the how much it costs to insure against default. So yeah, we'll have to see. I mean, all these too big to fail banks are highly leveraged, and I wouldn't be surprised if they get into trouble. But does it mean that it's going to collapse? I don't know. But one thing I would say, all these too big to fails, be it in Switzerland, the UK, US, in the Eurozone, the rules there, if they get in trouble, is not bailouts, but bail in. So anyone that has over 100,000 francs on deposit with Credit Suisse, they could lose everything above 100,000. So another sign that I think people are getting concerned, especially people who have millions in the bank, or be it individuals or companies. Hopefully they should know about the bail-in rules and maybe protect themselves outside the system with gold and silver, of course. Ant H, I see your subscribers has gone up above 71. Yeah, I was surprised as well. It's a nice surprise. It jumped from like 69,000 early yesterday to 70. I mean, I think I've gained about 3,500 subscribers in the last 48 hours. It could be because I did an interview with Earl Grey. He's got a lot of followers, and we got like over 60,000 views on that interview on his channel. So maybe I'm getting subscribers from there. Yeah, and it's good. Hit the thumbs up. Yeah, that helps. Mr. B, hi, Mr. B. Jonathan Thomas, gold investments have stock of capital gains free. Oh yeah, I mean, they've got, at least until last week, they had plenty of Britannias and sovereigns. Coupon, yeah, my coupon code is Monaco 64. Serkan Actors, hi Mario and all followers from Abu Dhabi. It is almost midnight here and need to go get up at 6 a.m. for, but I will watch until the end. We're going through epic times as humanity. I agree. I think this is like unprecedented in the last few hundred years. We could be seeing the whole central banking model come under threat. And the Bank of England, aside from the Swedish central bank, I think, which was founded in 1660, is the oldest central bank, and we're seeing them in trouble. So we've got Rafi just coming on. So he's a little early, which is good. I'm just waiting for Rafi to come on. He's connecting. So yeah, as I was saying, I think it is historic what's happening. I think people are starting to realize that they're pulling the curtains, drawing the curtains, and you're seeing that the man behind the curtain. And I think what the Central Bank of England had to do last week just goes to show that the gilt market is basically collapsed, and they had to save it. But can they really save it? Because all they did was create more funny money to buy gilts. So I think that could spread to Europe and the US eventually. Okay. Nasser Siaf is here. John Griffin's been a subscriber since 2020. Jeffrey Solomon, I agree with you. Physical is more important than ever. And we still, people who haven't gotten any have still a little bit of a window of opportunity, I would say. Over here says from here on in, every precious metal purchase I make is a FOMO purchase. I can't see Rafi. What's going on? He's trying to connect.
Hi.
Oh, hi, Rafi. How are you?
Good. One of my smaller children just woke up with some kind of a
All right.
bug. So my wife's taking care of her, but I had to go up there and make sure everything's okay.
Good, good. How are you doing? Okay.
Yeah.
Someone was just talking about that things are epic right now, and I said that I think like the Bank of England, for example, is aside from the Swedish central bank, which is I think was founded in 1660, is the oldest central bank. And I mean, what's happening in the gilt market, and that the fact that they had to save it with more funny money. I think it's I think people are going to soon realize that things are unraveling. What do you think?
Well, I've uh, I've tried to imagine the moment of when, the light goes off in everybody's head as far as they can understand it, because, the most basic way you can understand it is I have to get rid of money right now for anything. And
Mm,
that's what hyperinflation is, when basically everybody understands what's happening on their own level and they just do the most basic thing that they can, which is protect themselves.
yeah,
When is that going to hit? I don't I don't I don't know exactly how it's going to play out, but it seems that every day now something happens
yeah,
somewhere.
yeah,
And that's what I get. It seems to me that we're weeks away from something big.
yeah,
Exactly what or exactly how many weeks? You could say 10 years is 520 weeks. I don't know. It seems like things are getting very immediate.
yeah. I haven't seen the situation like this, in my 30 plus years that I've followed financial markets. But someone is asking, was it only final salary pensions in the UK at risk? Well, I think it was definitely the final salary pensions, but it probably was also other private pensions that are not final salary, because yeah, all these pensions are highly leveraged because in the last 10, 15 years, they've had to get used to zero to very low rates. And when people sign up to these pensions, they're told, oh, when you retire, you're going to have such amount of capital, and we're going to give you a 6 to 8% return. And the only way to get that 6 to 8% return in the last 10, 15 years is to leverage it using derivatives. And I think the turn in bond yields has been so sharp and rapid that it's unraveled everything. Any views on that?
Yeah. I mean, that's exactly what's happening. I mean, what do people expect when they do things like this? What do they expect is going to happen? Everything's going to keep going smoothly forever? I mean, I don't understand what even the most basic people are thinking. Even the most basic Keynesians, what are they are they even thinking? Do they even have a long-term horizon? What
Yeah,
are they looking at? And it's hard to even say, but like this situation is it's brought like another sort of topic to the fore, and that is when we look at, let's say bond prices, and we say, oh, interest rates are 1% or 2% or 3%, and the CPI inflation rate is like 10%. So why would anybody buy a bond under these circumstances? It doesn't make sense. Yeah, as an individual, when you're buying a bond to save money, it doesn't make sense. But the way that the pyramid has been sustained and the way that the system has been built upon itself is that all these massive pension funds are centralized and they're regulated, and they're told that they have to buy certain
yeah,
things. or they can't function. So it's not like people are choosing bonds because they think it's rational.
Mm.
It's that they're being forced to choose them because they have no choice. So, that's why when everything topples over, it will all topple over at once, because once one of these big behemoths moves, they all move at the same time. So how long the collapse takes, it could take, days. I don't even know what that would mean. This is crazy. This whole thing is crazy.
Yeah. We got a super chat from Dmitry Shmerkovich. He says, Rafi, Shana Tova, Gamar Hatima Tova. Happy and
Yeah.
sweet year to you and your family.
That means have a good it means have a good seal of have a good sealed verdict. I'd say, like, because God makes his verdict on Yom Kippur,
Oh,
which
I
is
see.
on 2 days, and he writes down
Mm.
supposedly the verdict on Rosh Hashanah, and then he seals on Yom Kippur. So it's a have a
Oh,
good seal
oh,
on the
good.
year.
There's only one way. Thank you for your super chat. He says, boomers in UK are panicking. I think they should, not just in the UK. And just to think about it, a lot of people who are on these final salary pensions, if the Bank of England hadn't intervened, they would only be getting like the state pension, which isn't that much. So it's really serious. And I think a lot of people, even who work in the bond markets, like the specialists in the city, are saying that they're going to have to keep this QE going permanently because they won't be able to flatten the curve, as they say, in 13 days. So there you go.
Yeah, everyone will get their 6 to 8% return nominally, and meanwhile, hyperinflation will destroy everything, and
Yeah.
they'll lose it.
Yeah,
It's,
they'll be able to buy a coffee with their monthly pension.
yeah.
Matt Bittner, what national mint silver coins have the lowest premium and best value in your opinion? Well, the thing about that, Matt, is that they change all the time. Right? I don't really know. Uh, Here in the UK, I would say I'm not sure. I think those Krugerrand silver ounces, the premium there is quite low. But you just have to check around with the different dealers, and they can change all the time, the premiums.
Mhm.
Uh, we got another super chat, amazing mystical. Thank you. He says, keep up the good work. Yeah, so the title of the live stream today is Kwarteng opts for growth instead of a gold standard. Will it work? That all they're saying now is that they want to have growth. They want to grow the economy faster than the debt, and that's the way to write off the debt. But my view is that if it was so easy, why isn't everyone else doing it? And they're already having problem not just with the left, with labor, but even within the conservative party. There's people protesting about their policy, and I think it's going to be really hard to grow out of this. They think that they should do what the US and the UK did after World War II. But back then, you had pent up demand after the war. You had the baby boomers, a growing population. And now we've got the opposite. We got all the baby boomers are retiring. The fertility rate is really low in the UK and Western Europe. I don't see them growing out of this. What's your view, Rafi?
Well, it can take a step back and realize that when they say the word growth, they don't really mean anything concrete.
Yeah.
I think Rothbard dealt with this maybe in Man Economy and State. He asked, like, what do they mean by growth? What is growth? What's growing? What are they measuring? Even like for example, like if we could take an extreme example, like let's say somebody has a mansion and he's consuming like crazy and he's really rich, and then he decides to like go to Nepal and become a monk and be an ascetic, and now he's much happier. Did he grow? Yeah, I mean, he kind of did. I mean, he's now a spiritual guy and he's much happier with his life, so he grew. But like in terms of GDP, did he grow? No. So they mean like GDP, and by GDP they mean how many units of currency are moving around your property on a daily basis or wherever they measure it. So they're talking about currency moving around is what they mean by
Yeah,
growth.
and
It's like
also
random. It doesn't mean anything.
fiat currency. It will be, they're going to keep the debt bubble going, but they think that somehow the real economy can grow faster than the debt grows, which I think is completely, we've come to a point where there's so much debt that it's going to be really hard. And if they want to cut the size of government, which they should, I think, the welfare state and everything, the bureaucracy, they will have a general election. The government will collapse very quickly because I would say a lot of British people still want everything from the government. So it's going to be really tough, I would say. But you might have noticed the thumbnail for this live stream had this book on Kwasi Kwarteng, War and Gold, which is a really good book. It's about the history of gold and war. Basically, he talks about Portugal, Spain, all the major reserve currencies. But I looked at the conclusion at the back of the book, and he basically said that he doesn't expect the gold standard to ever come back because he said nowadays governments, currency, and money and monetary policy and fiscal policy are all intertwined, and that gold doesn't allow for government to spend as much as they want. And then
reality doesn't allow them to spend as much as they want.
That's right. But the other thing he said is that we do have a huge debt problem, and he quoted a few guys who wrote books about that. I think it was he quoted the breakdown of the paper money economy and some other guys, and he does agree that there's a lot of debt. And he said that there's three ways that we can get rid of the debt. One is to default, repudiate the debt. The other one is to inflate away the debt surreptitiously without people noticing it. And the other one is to grow out of the debt. And I think that he's chosen the third. And I don't think it's possible, though. And it's a shame that he doesn't go for, if he thinks there's too much debt, why doesn't he go back to, because he mentions the period from 1821 to 1914 in the UK, where you had a gold standard and the economy grew a lot during that period. And it basically, the national debt that was taken under the Napoleonic Wars, that went down in real terms, and the economy grew. So they grew out of that debt, but under a sound money system. Is it possible that he might bring that up? I'm not sure, because from reading this book, it doesn't seem like he's keen on a gold standard.
Well, he's probably not. I mean, he's a high up government official. You don't get high up in the government by being a gold buff. That's not possible anymore. And even when you are high up in the government because you're a fan of gold, you eventually turn, like Greenspan.
Yeah.
So the mistake he's making is thinking that a gold standard has to return. And my thinking, it doesn't have to return. It's still here. And because what gives current currency value is the fact that you can still acquire some gold with it. So we're still a very, very diluted gold standard in the sense that you can still take some currency and acquire gold. Once you can't do that, you can't buy anything with it. Yeah. That's what happens every time there's hyperinflation. Why doesn't he look at the reality? Every time there is hyperinflation in any currency, no one can acquire gold with it. That's not a coincidence. That's the measure of it. And it's not like gold prevents governments from spending. It's not like reality prevents governments from spending anything they want. Nobody can spend anything they want all the time and just get anything. That's tree of knowledge, tree of life, fountain of youth nonsense. It doesn't exist. Gold is only the most appropriate measure towards discovering when it is that you're spending too much money.
Yeah. We got a question from Joker Alpha, and I'll come back to you about gold and Kwarteng in a minute. He says, does the spot price of precious metals include the mining expense to get it out of the ground? Oh yeah, it does, of course. And it includes the cost of mining, includes the cost of refining, of minting coins, or also making bars, and then the price that they sell it to the wholesale market. Of course, it includes everything. But it's interesting, Rafi, because he actually ends the book with this paragraph, and I'll read it. And he says the relationship between the value of the world's gold and global GDP intuitively, but on an infinitely larger scale, matches the advised reserve held by the goldsmiths of 17th century London, who, as a rule of thumb, would keep a gold reserve of 10% of the outstanding loans. This is a playful point, but it may well be a truism to suggest that as the global economy expands in nominal dollar terms, even when fueled by vast quantities of credit, the value of gold, better than perhaps any currency, reflects this process most accurately. The gold standard will never formally return, but movements in the price of gold may well suggest that investors, in their lack of faith in paper money, have informally adopted one. So that's how he ends his book. So actually, I thought that was a good point.
Okay.
Yeah.
You could say that the gold standard will never formally return insofar as you'll never have a government that will come together in some kind of parliament and pass a law that now currency is worth this much, blah, blah, blah. Maybe that'll happen, maybe it won't happen, but it doesn't matter if it happens or not. It doesn't matter if we return formally to a gold standard because a government gives its sanction and puts a stamp. Now we are on a gold standard. And everyone claps and praises it. But when people can no longer take pounds to buy anything, they're not going to go to Bitcoin. They're going to go to gold and silver. That's just what they are going to do. Call it a gold standard, call it a panic, call it people being nuts. I don't care what you call it. That's what's going to happen.
Yeah. And basically what he said there was that you need to be your own central banker. And I think he's right about that. Joko Alpha says, why do we have premiums over the spot price of precious metals? Do you want to explain that, Rafi? And then I'll give my 2 cents on it.
No, you could call it a premium, or you could just call it a discount on spot. It's the same thing functionally. I think it's more accurate to call it a discount on spot. Because what is spot? It's just a price that derivatives traders use to mark some kind of price that theoretically has a connection to something physical, and but most of them don't exercise that connection. So it just means that the price of gold derivatives is trading at a larger and larger discount to the actual metal. That's all it means.
The other thing I would add is that if let's say BMW produces a car and it costs them $30,000, and then they sell it to a wholesaler, and they sell it for $32,000 to make $2,000, and then the wholesaler sells it to us or sells it to a retailer for 35, and then they have to make a profit and they sell it to us for 40. So there's a premium there as well in the price of cars. So bullion dealers, they don't they don't work for free. They have to make a living. So a lot of times they have to make a premium. And I would say silver, for example, the reason there's such a huge premium is that it's much cheaper. It's much more profitable to mint a gold coin where you get, over $1,000, and you can make a much more profit than to mint a 1 ounce silver coin. And that's why the premium is higher in silver. It's because the price of silver is, I would say, artificially low. At large, thank you for your super chat. Low blood pressure. Rafi, do they get Popeye's chicken in Israel?
Maybe, I don't know. Are there branches? I don't know. I haven't seen one. There used to be KFC here. There was some kosher branches of KFC, but no, I don't think so.
Okay. Let's see what else. Silver Task, what about the older generation keeping paper money under the mattress Well, yeah, that's a losing proposition, I would say. For example, I had a few guys at the golf club here, older guys, a few years ago, 3, 4, 5 years ago. They asked, "Oh, I've got this bond and it's coming due. What should I do?" I said, "Why don't you buy a few gold sovereigns?" And all of them were like, "Oh, no, no, that's too risky." And at the time, I think the price of gold was under £1,000. So, but the pound is losing, its purchasing power very quickly.
Mhm.
Uh, Warning sign says, Rafi, I miss your humor. Well, you need to watch his channel, Rafi Farber on YouTube. I enjoy that. uh, Anirua, does Rafi know whether the calorific value of the shekel is better than the euro or pound?
Calorific?
I don't know
What
what
does that mean?
I don't know.
No, no, the shekel is garbage.
Garbage like every other fiat currency.
No, even worse. The shekel is
Yeah.
worse than the euro because the euro at least has the ECB has some gold reserves. The shekel has nothing.
Hmm. Uh, let's see. The other thing about, let's say, well, let's talk a little bit about Credit Suisse. Someone has asked about that.
Mhm.
Have you got a view on that? Or
Credit Suisse. I looked at their annual report, and they have, what is it, like 13 billion euros of exposure to European sovereign debt. And the value of those bonds is falling as interest rates rise. And that's not the only thing. I mean, they're a huge pyramid. They're a GSIB, generally systemically important bank.
hmm,
And look, one of them is going to fall, whether it's Credit Suisse or Deutsche Bank. When one of them falls, the rest of them are going to have to all be bailed out at the same time, or all fall at the same time. And either way, you go to gold and silver after that.
so this came out, I think, in today actually. OPEC plus, I think it's OPEC plus Russia will consider output cut of more than 1 million barrels. So that's interesting because the U.S. Under Biden, they've sold a lot of the strategic petroleum reserves, and
Mhm.
under the rules of those reserves, they have to replenish it. And I remember hearing when they started selling that by next year in 2024, they have to buy back all that oil that they sold. So I think things are going to get quite interesting, even though we've had a big drop here as we see Brent crude has dropped from 125 to 85. I think we could see it go back up.
Mhm. Yeah.
Yeah, let's see. What else have we got? Anyway, oh, I wanted to show you guys the chart of the 40-year, sorry, is the 10-year gilt yield, which is the UK government bond. And, we had, this is 40 years of lower lows and lower highs in yields. And I think this is what gave the credit bubble and the fiat currency bubble its fuel. And I thought, we are close to the end of this, like a year and a half or two ago, and I think I was right. But what I think, actually, I'm not shocked that it's reversing so quickly because we got so much debt and derivatives, and it's all unraveling. So this is what they're concerned about: how quickly it's going to go up. If if it had gone up like this gradually, I think it might be okay, but the fact that it's going up like this, and this is not just the UK, it's happening in the US, it's happening in Europe as well. Rafi, any views on that?
And how fast it's going to go up?
Yeah,
Well, I'll put it this way. Um, I don't know if this answers the question, but it has to do with the UK. I mean, I was talking with a friend of mine. I learned with a friend of mine, a British guy, and he earns his income in pounds. He lives in my neighborhood in Israel, but he works for a company in the UK, and he knows a lot about inflation and monetary history, which is why I learned with him. And I had read an article about what's his name, Carl Icahn, right, the corporate raider back in the 80s, who was comparing what's happening now to the late Roman Empire. So, and he was like, oh, because in the years 100 to 300 of the Common Era, there was hyperinflation in Rome. So, and then I'm thinking, like, I know that era of Rome because that's when the rabbinic era was, and the Jews have a lot of literature from that specific time period talking about monetary transactions, and we were under the Roman Empire, and they didn't say anything about hyperinflation. And he's like, yeah, well, back in the ancient times, it's not like a central bank would print trillions of whatever currency units. They would clip their coins, and that would take time.
Yeah.
It would take decades. It would take hundreds of years for the inflation to build up. So yeah, they were having hyperinflation on their standards, which was about 1 to 2% of consumer price gains a year. But the inflation, it doesn't really matter how much consumer prices rise because of the inflation that you do. That's just an effect that you see on the very edges, right? The effect of clipping coins is that the entire structure of production of the Roman Empire gets messed up. And then at the end, you have an explosion. And it doesn't even matter if consumer prices are the ones that are rising like crazy. Something is going to break and something is going to snap because what you're doing is not natural.
Yeah.
So when you're talking, so back to that chart, when you're talking about the lower and lower bond yields for 40 years, in Rome, it took 100, 200 years and it still collapsed. So here it took like 50 because we go so much faster, but it's the same thing because what we're doing is not natural. What Rome did is not natural by clipping its coins. It's theft. This is theft. It's just a much faster version and much more high-tech version of it.
Yeah.
So we'll see the same thing.
Yeah. The Amazing Mystic, thank you for your super chat. DMC, if and when a CBDC is introduced in force, will it be like the French mandats and only be around for a limited time? If so, roughly how long will it have to live?
CBDC?
Yeah, I don't think it's a solution either. I don't know how long it's gonna survive. What's your take on that?
I don't even think it's going to be. I don't even think it's going to come out of the womb. It's going to be stillborn, or it's going to be aborted.
Yeah, because all the CBDC is a fiat currency hidden behind a central bank. It's not really anything special.
Yeah, but that's one thing I think we really got to get out of our heads, that these group of geniuses led by Klaus Schwab, this is totally false. They're like, they have hyper brains and pulsating heads, and they're like crazy geniuses. And what they really want to do is destroy the world so they can introduce CBDCs and have absolute control over everything. And we're all doomed. That's total nonsense. That's not going to happen. It's impossible. They don't know what they're doing, first of all. And second of all, like you can't just get people to accept a CBDC without it being based on the fiat currency that already exists. So if they build it, they're going to build it on top of this fiat currency. It's going to take many years to get it, to get the infrastructure there. And they don't have many years. They have maybe months.
Yeah. And
there's no time.
My hope as well is if there is a currency collapse, a hyperinflation, then they'll lose all credibility and they'll have to go back to gold as an anchor and silver. Echo, thank you for your super chat. Thanks for covering all the fast moving developments at this time. I always know where to go to get a great roundup, and it's not the BBC. No, I never watched the BBC, but it's interesting because I sent Rafi an article from the FT. It was an editorial by Martin Wolf, who's a guy you met, Rafi. And he's really critical of the policy that they're implementing in the UK, Truss and Kwarteng. But at the same time, he doesn't seem to give any solutions. And I made a comment in that article saying that I think what's happening, the crisis, is not because of the mini budget or anything. It's just a culmination of all the debt. So I don't think Martin Wolf has a solution, nor the government.
No, when I spoke with him, It was like maybe 7 or 8 years ago now. I asked him about a gold standard, and he said, "Yeah, it's never going to happen. The gold standard makes no sense, and we're just going to have to continue with the current system," which means he doesn't think in terms of stability. He
Mm,
just draws out, trend lines from the current
yeah.
reality. He doesn't think beyond that.
Anubis Finance, question for both of you. How long do you think it will take us to rebuild after this fall? 1229, it took the Romans 1,229 years. It took the Romans. Scary. Well, I'll answer first. I don't think it's, I grew up in Brazil. And I left in the mid late 80s, but we had a few currencies in the 80s. And yeah, it's not nice and it's disruptive. A lot of people suffered. There's a lot of misery and poverty. But a currency and money is a human construct. And I think in Germany as well, when you had the hyperinflation, it was really painful for years. The term catastrophe was normal, but after it collapsed in 23, it was really, it was like taking a tooth out. It really hurt, but then everything, it was relatively quickly, even though, of course, what happened in Germany in the ensuing decades after that wasn't very good, socially or politically. Would you want to elaborate your that?
Well, so let's reframe this for a second. I mean, who is we and how long is it going to take for us to recover? Like, I think we got to stop thinking in terms of the collective we. How long is it going to take for you personally to recover from this? Well, if you have what you need and you have a food source and you have energy, you stockpiled wood or gas or whatever it is you're doing, I don't know, and you have a garden and you have real money, how long is it going to take for you to recover?
Yeah,
Maybe
you
you won't
might
even be
even
recovering. Maybe you'll be just getting richer. I
yeah, you
mean,
might
you'll be
even
fine.
profit. You might even profit in the crisis. Yeah, that's right.
So
That's
make sure
why,
you're good. Make sure you
yeah.
recover, and then you can help the people around you and help them recover, and
And
then you can spread out. So like, how long does it take for the recover? Do what's right, and it'll be quick. But don't rely
yeah,
on the government to do it.
yeah. And that's why Rafi and that's why I do what I do here, and uh, to help wake people up. And I know not everyone buys into it, but that's their problem. Um, Someone mentioned something about Liz Truss wanting to move the embassy to Jerusalem. Have you got any opinions on that?
I don't care where embassies are. It doesn't make a difference to me. I mean, there's like this thing
That's
in
what I
Israel.
thought.
Oh, I understand that. I get the whole Jewish nationalism thing. We want it in Israel because we want the governments direct.
Mm,
Personally, I don't want any embassies in Jerusalem. I don't want more governments there. They're just
yeah,
annoying. Just leave me alone.
I agree with
My
you.
capital is Jerusalem. Whatever you think my capital is, I don't care.
Okay. So we got a super chat from Unrirua. Calorific value equals heat output of fuels. Planning ahead. Bought wheelbarrows, buying a central bank fear incinerator, and be toasty warm in coming winters. Yeah. Uh, Now, Echo, now that Russia has expanded its borders, if Ukraine presses those borders, just how ugly could this really get? Yeah, well, now those regions in southeast Ukraine, they're now they had the referenda. They voted to join Russia. They were accepted on Friday, so now that's part of the Russian Federation territory. So yeah, if the Ukraine attacks those Russian territories, well, things could get ugly. And I think President Putin warned about that. Am I having an opinion here? No, I'm just telling you what I see. What about you, Rafi?
Um, I don't know what's going on in Ukraine.
Yeah.
I've never been there. I had a friend who just got back from there. There was like every Rosh Hashanah, like 40,000 Jews, like they go to Uman in Ukraine to visit the grave of Rabbi Nachman Breslov. Hasidic rabbi there who was and they all like it's the Hare Krishna of Jews. That's their movement. So I asked if any of them shot any Russians. They said they didn't see anything. I don't know what's going on.
Yeah.
It's all just a bunch of media spin. Whatever happens, happens. And I don't know. Good luck to Putin. Good luck to Zelensky.
Yeah.
I don't know what's going on.
I think like there's an old saying that the truth is the first victim of war. So there you go. Echo says war is expensive. Yeah, it's expensive, but it's really profitable for the big companies. I recommend War is a Racket by Smedley Butler. He talks about how like thousands of millionaires were created in the US during World War One.
And there was Jay Cook in the Civil War, I think.
Yeah.
Remember him.
Let's see what else. Trains with full tanks. So yeah, here I think you talked about you had like an addendum. Yeah, and I recommend the viewers if you follow the markets and you like trading, Rafi has the End Game Investor newsletter on Seeking Alpha, and you spoke about today that Europe as well is concerned. You know, the ECB, not just the Bank of England. You want to touch upon that?
I think that was an article that you linked to.
Yeah, that's right. But I'll let I'll let you talk about it if you want.
Yeah, well, exactly what was going on with the ECB. There were it was a Telegraph article, right? Is that like a tabloid? That's
no,
like
Telegraph is like a broadsheet, they call it. It's not a tabloid, but it's very like conservative. Boris Johnson used to work for them and write for them, for example.
Okay, so it's not like Express, which is like really okay. So I don't know. In that article, they were talking about weeks away from some kind of catastrophe in the bond market. But like, you got to understand, like, if this is happening in the gilt market, there all these markets are the same, and the structure is the same. If these trading houses or these pension conglomerates are looking for yield by leveraging their bond holdings and borrowing money, then it's going to be the same pattern everywhere where it's the same thing. I mean, these pension funds are losing money now because interest rates are rising and the value of and what they have to pay on their borrowings is rising while what they get is less. So it's the same thing that's happening even to the central banks themselves. You know, the Fed is entering negative equity because it has to pay more interest on the excess reserves that other banks hold, and it earns less interest on its bonds while the value of its bonds fall. It's the same problem everywhere. If everyone's stuffed with a bunch of bonds and the value of all those bonds goes down, then everyone who holds those bonds is going to be in trouble, which is everyone.
Yeah.
So it started in the UK. So I speculated 2 years ago that it would start in the UK because they started directly financing all the coronavirus spending 2 years ago, which means they had no middleman to do their QA. They just did it, directly. And I was like, yeah, that's hyperinflationary. So I wouldn't be surprised if the pound goes first.
Yeah.
And appears to be what's happening. And
they had this account called the Ways and Means account. I'm not sure, and we don't even know how much they bought directly from the government. Usually the QE is done through the primary dealers. I suspect they did some with the primary dealers, but now that they were saying like in the beginning of August, we're going to start quantitative tightening in September. And here we are in September, they're doing more QE, which is, I don't see them stopping it. And the other thing about the bond market and every market in the fiat currency world, they've become so leveraged. There's so much speculation because they drove returns down so much that people have to use derivatives. And again, like in the 1929 crash, the 1920s, a lot of the reason why people lost so much money was that there was a lot of margin, and the same thing is happening now. But I think its magnitude's higher, like than it was in the 20s. The leverage we have today. let's see here. Keith in Arizona, effect of China dumping the dollar. I mean, someone asked me that the other day, and I've seen that China has been selling their reserves over the last few years. I'm not sure if they're really dumping it right now. Have you seen anything, Rafi?
I've seen some articles that were shared with me, but the era of social media where everyone's sending you stuff, you gotta
Yeah, you got to
uh,
take it with a pinch of salt.
everything is sensational, including myself to some extent. I got to recognize that.
Yeah,
I'm not trying to be sensational. No, but like I'm trying to stay rational. But like in this type of world where everything is so hyped up on everything,
yeah.
to stay level-headed in this sort of environment is difficult, and we can just do our best.
Yeah, everything's so crazy as well. We don't know anymore what's real. And I was listening today to King World News. He was interviewing Nomi Prinz about what happened in the UK. And
Mhm.
and then she said, yeah, so the Bank of England came in and saved the day because no other banks wanted to do it. BlackRock didn't want to keep dealing anymore in these funds. And I thought to myself, if BlackRock doesn't want to deal in it, uh, how different is it the Bank of England doing it? It's like they don't have anything. And I thought to myself, this is collapsing. And I think that's what's happening. Um, yeah, very hard to see through the hysteria, Echo says. Uh, oh yeah, I wanted to ask you, Rafi, because have you looked at what's happening in silver and gold in terms of the COMEX and LBMA supply? Is it continue to drop?
Oh, I didn't check the LVNA. I think it comes out in a few days.
Hmm.
But from what I'm seeing in silver, we're down to like 40. I remember the exact number because it's the last peg to gold in 1973. It's 42.2 million ounces of registered silver, and it's going down and down and down and down.
Yeah,
Why? Because it's cheaper to buy silver on the COMEX than it is to buy it in the physical market. So the supply is going down.
yeah,
And gold, I think we're down to like 23, 24 million. It's still a lot. We still have a long way to go in gold. But we're getting there in silver. And the question is the eligible supplies, the stuff that's not for sale, who owns it? And it seems to be a combination of ETFs and private owners. And what like we have to ask, why would silver move from registered, meaning for sale, against futures? Why would they take it off the market if they're not going to hold it for a long time?
yeah,
It seems to me this is the final countdown. Could we be wrong? Yeah, I could always be wrong. I've been wrong before.
yeah.
We'll see.
Um, I was going to ask you something I forgot. Someone's asking the COMEX experiment. Did you get the money back, or is
I
that?
got the money. I didn't lose any of the dollars.
Yeah,
It ended up being a profitable trade, but that
yeah,
was just accidental. I
yeah,
wasn't
yeah.
trying to do that.
Oh yeah,
But
someone asked. Oh, sorry. Go ahead.
oh yeah, so no, it was fine. Like it was really annoying, and they weren't used to it. I wasn't used to it. I had to put up more margin in order to short a contract to declare delivery. It was like some kind of weird thing that made me really nervous, but I eventually got all the money back and it's fine.
Yeah. Oh yeah, someone asked about the Shemitah year.
Mhm.
There had been a lot of talk that the 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 period around that time we'd see some big things happen. And I have to say, the pound and the gilt started collapsing on Friday the 23rd. So have you got,
Mhm.
they're asking your opinion on maybe you could explain to people what it really is, because being, Jewish.
Okay. Well, Shemitah's pretty simple. It's like every 7 years, you got to stop growing food, and you just let the land lie fallow, and you can eat whatever grows by itself. and debts are canceled. Functionally, they're not really canceled because we give whatever. I'm not going to go into that. And then every 49, this is at the end of the book of Leviticus. If you want to check it out, it's all there. And then every 7 Shemitah cycles, we have a Yovel cycle where, in addition to all debts being canceled, all slaves go free. There is an idea of slavery, of voluntary slavery. If you go into a debt that you can't repay, so you repay it with labor. I mean, it's a simple concept. It's not like we have whips and we're like, hurting people. It's just like, okay, he's my slave now because he can't pay back the debt. There's nothing wrong with that.
Yeah.
So all those people go free on the Jubilee year. And there's some Jewish sources, some in the Gemara, some in the Kabbalah, and I'm not a Kabbalah guy. I'm more of a Gemara guy, but that the sign of David, whoever you think he is, comes on after a Shemitah year. So is that true? I don't know. I guess we'll see. And it's really, it shouldn't be a focus. Whatever, history is not up to us. So.
Yeah.
Bean counting history, it's fun. Keep it in the back of your head.
Yeah.
Maybe it stabilizes you.
Yeah.
Don't let it get too deep in there.
Yeah, I think though the way we'd have all the debts, especially the national debt, wiped out would be a hyperinflation. Anyway, Matt Bittner asks, what kind of silver do you get for one futures contract? Well, one contract, the main silver contract, SI, is 5,000 ounces. So I think you get 5 1,000 ounce bars, and the bars might be a little more. Some bars might be more than 1,000 ounces, and some less than 1,000 ounces. So you don't get like 5,000 coins. You get just big. They're not really nice bars. They're just silver bars. Nothing really. Yeah. Stephen Brown says 610.7 trillion currency and credit derivatives. The time bomb is ticking. Yeah, I saw the US debt clock is almost at 31 trillion. Yeah, the derivatives notional amount, we don't really know how much it is. It's probably over 1,000 trillion or a quadrillion. And the biggest kind of derivatives are bonds and interest rate derivatives. And that's why there's so much trouble out there right now.
Actually, I saw today, and I wrote about this on the Endgame Investor, that the IMF COFR data, for what COFR stands for, it's the amount of foreign exchange in central bank accounts around the world. The total amount of forex is really starting to drop now, which shows that it's not just the money supply in the US that's falling, it's the money supply everywhere is falling, and that's because debts are defaulting. And if debt is counted as part of the money supply, when it defaults, it's no longer part of the money supply and it disappears into money heaven. So there's deflation, there's real deflation going on in assets and inflation going on in consumer prices. And that's what hyperinflation is.
Yeah, and like you've said it, I think I watched one of your videos that even if consumer prices are not going up, even if like the money supply is shrinking, you could get hyperinflation. Maybe you could explain to the viewers what you mean by that.
Oh, you mean in the final stages?
Yeah, it's like a more of a psychological thing, isn't it? And when people lose faith, and I think what happened this week in the UK with the Bank of England is making a lot of people realize that they will never be able to stop the inflation. And when you realize that, and von Mises talks about that, when the general masses realize that there will be no stop to the inflation, then they try to get rid of the currency as much as possible.
Yeah. So when that psychological shift happens, there's nothing that a central bank can do, and the money supply doesn't matter anymore, because once you've activated, like for decades, they've had the simpletons on their side. They've had the masses on their side because the masses really have no reason to turn around and suspect anything, because they get their welfare or whatever keeps them alive day to day, and they live hand to mouth, and that's what they're used to. And okay, so that's most of humanity, for most of human history, lives that way. once they can't live that way anymore and they can no longer live hand to mouth and their lives are in jeopardy, then they'll attack the central bank, not by any intellectual process, but just by self-preservation, just like the free market by individual self-preservation makes everyone's lives better because everyone tries to make money by helping other people. But it's the same thing. Hyperinflation is just the free market immune system working to reject the disease of central banking and attack the central bank. And everyone does it for their own individual interests by spending money as fast as possible and staying alive that way.
Yeah.
So once that defense mechanism is triggered, it's like the immune system is woken up and they can't suppress it anymore.
Someone's asking about the mini silver contract. I don't think they do delivery for the mini silver. And do you know about the mini silver? There's a mini gold as well, but those are just for trading.
Yeah, it's just for someone who doesn't have the capital to put up for
There's no
put up for a 5,000. But I think even so, I think they can only be traded in units of 5 or something.
Yeah,
I don't even get what it's for.
and I think they call them a cash settlement, so there's no delivery.
Yeah.
And the other thing as well, if it was so hard to get delivery of the main silver contract, I think it's probably impossible to get the mini silver, and I wouldn't try it. Henri Rua, when will you take Glint on Super Chat? PS 500 euros. Well, Glint is not a currency, so Glint is an app where you can buy gold and they store it for you in Switzerland, and you can spend it through a MasterCard. You can send people, it's called Glinted in the UK and Europe. I don't think it's working in the US as well. So you can glint, let's say, a gram of gold to someone. It's almost like sending a text and they'll get it right away, but they have to have a Glint account. Joker Alpha, Rafi, will you try to buy silver from the LBMA? Well, LBMA is a wholesale market, is just for like the bullion banks. So yeah, you'd have to have an account probably with JP Morgan. You're gonna, I don't think.
Yeah, that's not happening. No.
The LBMA as well is in London. Don't forget, you can buy unallocated silver through the LBMA, and even allocated, and you don't pay VAT. But then when you take the delivery, they charge you the 20% VAT. So it's not a really good place to buy silver. The LBMA, it's mostly for price speculation. We got some minutes to go. Silver will become unobtainium at any price, so get it now. John Norris. Is SLV leveraged?
I don't think so.
No, I think they always cover it, don't they? What I think might be happening is that they might use silver from COMEX. There's a lot of there's a lot of things going on there. BP, which part of the Mishnah can you find the purchasing power of silver during the 2nd and 3rd century?
Tractate Bava Basra, chapter 4. Seder Nezikin.
Okay. LME, a bad place to buy nickel. Yeah. Just look at Sprott funds and gold money for stored physical metals. Billy,
by the way, the gold to silver ratio back then was 25-1.
Oh, during the Roman times, yeah.
At least the Mishnah records it as being 25-1.
Yeah, and what I remember about looking at those charts, and I'm reading as well about history. I think it's in this book here that I'm reading. Not this one, another one. Sorry, it's this one that I haven't finished. It's about the Middle Ages, but it talks a little bit about Rome and the inflation. And I think it started in the 3rd century. And by the end of the 4th century, there's almost no silver in the denarius. and then Rome collapsed. They couldn't pay the
Yeah.
soldiers.
Well, the third century was when the Mishnah was being compiled. So that's specifically
Yeah,
the era that we know most about monetarily.
yeah. Um, the other thing that I was doing I was working with some numbers because I read that conclusion by Kwarteng of his book, and he said that a 10% backing of gold to the money supply, because he said the goldsmiths, 10% of their loans. So I did a little calculation. If you take the UK M1, it's 2.5 trillion pounds, and you get 10% of that, that's 250 billion. And I did the calculations. We have about 10 million ounces as reserves. So that would mean a price of gold, I think, has to be like 34,000 pounds to have a 10% backing, the British pound. But then I saw that the UK has 150 billion of dollar reserves. I don't know why we hold so much dollars. We could sell that, and if we did and put it all into gold, the price would only have to be like 2,700 to have a 10% backing for the currency. But I personally think you need more than 10%. I think the UK during the 19th century had about a 33% gold backing, the banking system.
Mm-hmm.
Yeah.
Yeah, I think that Daniel Oliver goes into this, says that in 1980, the market forced a 130% backing at the high point. That only lasted a few hours, given that, but that was how high it went.
Yeah. Someone just mentioned UK just got rid of paper 20 pounds and 50-pound notes. Well, the thing is, I'll show you what we have in the UK. I think I got a 20-pound note. It's these polymer, it's plastic. So this has been around already for 3 years. So what they're getting rid of now, and you've had 3 years to exchange the cotton or paper one for this one. And the 50-pound notes, they've been like this for about a year and a half. So I don't think it's anything like they're trying to get rid of cash. It's just something that they've done. It's not like I think 4 years ago in India, they banned some kind of denominations overnight, and there was like riots in India. People couldn't get, they had loads of cash in small businesses and they couldn't spend it anymore. Frank,
yeah, that would be a problem.
Yeah, Frank Kavija, thank you for your super chat. Says thank you for all your truth, Mario and Rafi. Well, I try to be find the truth as much as possible, even though, like we said earlier, things are so crazy, you don't really know what's going on, but you try your best. What do you say about that, Rafi? The truth, it's
well, if I wasn't looking for it, what would I be doing? I mean,
yeah,
I can't even picture, living so deeply in a lie that you actually believe it, or ignore it so deeply that you just let everything that's happened in the past few years just pass over your face. It just doesn't make any sense.
Yeah.
I don't understand what it's like Mamish, we're living in different universes than most people on the planet, and it's hard. It makes it very hard for me to relate to them on even the most superficial level.
Yeah.
But I hope, like, when hyperinflation kicks in and they see that we're right about everything, even though our timing was not perfect, that maybe whatever part of them remains able to wakes up, and I don't know. I hope so.
Yeah, that's the thing. Yeah, there's the old saying that, and the truth sets you free, I guess. Do you think the BOE dumping dollar-denominated debts combined with the bail-in of all bank accounts over 80,000 may be tried? It could be tried. It's called the Corralito. The Argentinians, they in 2001, if you had dollars at Citibank Buenos Aires, you lost all of it, and they turned it into Argentinian government bonds. So that's the other thing as well. People who think having dollars in UK bank accounts is safe, they have to think again. Jeff, 43, are you due to interview the CEO of Glint soon? I was supposed to interview him last week, but I think he went on a business trip and didn't have time. I'll need to contact him in the next week or two. So anyway, Rafi, thank you for showing up and participating again. And yeah, any final words you have for the viewers, or?
Keep your heads.
Yeah. And
It's gonna
just
be
before,
it's not whether we have weeks left or whatever.
yeah,
I don't think there's gonna if there are any islands of stability, I don't think they're gonna be more than a few days at this point. Things are definitely heating up and the volatility is increasing, and it's gonna get crazier until the end from this point forward,
yeah,
I
I
think.
have a feeling this coming week now is going to get really volatile. I don't know why. Maybe it's because I worked in the markets, and sometimes when you see what's going on in the bond markets and all the volatility, it doesn't bode well, and all the stuff about Credit Suisse as well. And yeah, keep your heads. And the other thing as well, I think things aren't as bad. You just have to watch. Like there's a YouTube channel called Indigo Traveler, and it's this New Zealand guy. He travels around the world, and right now he's in Haiti. And if you want to see what's really hell on earth, unfortunately, you watch that. So, and we should be thankful that we can still do what we're doing here.
Yeah.
Yeah. Frank, what do you think will happen? The emergency Federal Reserve meeting on Monday. Thank you for the super chat, Frank. I don't know. I have no idea. Maybe they're gonna announce some kind of special program, which is basically buying, printing more money.
I don't think there is an emergency meeting. I mean,
Yeah,
I looked at it, and these things happen all the time. There will be an emergency meeting sometime soon.
yeah,
But it'll probably happen probably happen even without any announcements, and they'll
yeah,
just like come out with it like they, you
yeah.
know.
The other thing as well, just before I finish, you could argue that we are under a war environment because of Ukraine and Russia and the annexation. And under the law, the US and big corporations, they can hide things under FASB 56. So that's the other thing we need to think about. They could be already bailing people out, and they'll use the excuse of national security. So again, everyone, thank you for showing up. Have a great week. And yes, as Rafi said, keep your head. All right.
Okay.
Let me turn it off. In stream. All right,